The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast on a Thursday. Last time we recorded this on a Thursday, guys, remember I said I don't like doing it on a Thursday because things may happen on the Friday. On the Friday, what happened? A bank exploded. Pretty much. SVB. See, so we missed that. We didn't mention it. It's like one of the biggest news of the weekend. We didn't mention it on the Weekend Podcast. Not a mention. The world was imploding. We didn't give it one iota of a nod.
So what's going to happen tomorrow? What are we going to miss out?
Well, exactly.
Just release this on a Friday then.
It was released on a Friday.
Why?
Because that's Friday, start of the weekend. You know, ask Pete. Not Pete.
Friday is the weekend, though, isn't it?
First of all, let me just start by saying, Pete, have you called Amanda Holding yet?
Oh, yeah. I did, but she hasn't returned my call.
Oh, fancy that. Okay. We'll have to get back to it. And also, what we have to do is apologise to Steve. I've had a couple of people on the membership club on Discord saying, you better apologise to Steve. So, Paddy, you better apologise, actually.
Why?
Well, because we're talking about pensions. Turns out Steve's only right on something. See? Financials. He knows stuff. Well, he said the fact was a bit wobbly. It was a bit fluffy around the edges. It took a long time to get there. In the end,
yeah.
We thought it wasn't even a fact, was it? But he was talking about, apparently, Martin Lewis. Martin, he calls him Martin because he likes Martin. Do you find that Martin seems to it would work very well, Martin Lewis, on a sort of kids' TV show? He's like that, isn't he? I know he tries to explain it in clear day English, you know, the financial issues.
Get back to the facts. I was right. Come on,
yeah.
A little bit patronising. Anyway.
We've gone off on a tangent.
Yeah, we have, sorry. So, apparently, I've not looked up the facts, but Steve, reiterate what you said. You can draw your pension at 55. And then Paddy said, well, you can draw it any time. It's just when you get tax breaks. And I agreed with Paddy. Yeah, that's it. Yeah, you get a crowd of people not really knowing, but it sounds okay. It sounds about right what Paddy said, I thought. So I agreed with Paddy. Against Steve, and we made Steve look like a bit of a fool, which is not unusual, to be honest. But it turns out Steve, in some way, maybe you could Google it, someone. Steve, in some way, is right. If you have a pension, you can start taking bits of it out. How does it work, Steve? You obviously remember the fact. We should look this up, guys, because I'm way away from 55. That's why I'm not even worried about it. You know, that's 3 years away.
Wow.
Well, that is the fact, pretty much, isn't it? You can start drawing your pension out at 55, but it does change. 57 or 58 in 2028 or something like that.
Okay, well, I'm sure Peter's looking it up. Oh yeah, just come up on the first the result. It's Pension B. Now they're just listed and they're going gangbusters. But I put an alert on them today, and the alert came up, and they'd gone down a little bit. You can start taking money from pensions from the age of 65. So a lot of people think even start to work with pension from the age of 55 if you want to. You can.
Wait, why did you research this before the podcast?
I thought Steve was still on the fact there. You can often even start taking money from a workplace or personal pension. That's the difference, you see. That's the difference, isn't it? If it's a workplace or private pension.
I think I was quite clear about that when I was talking about it.
Yes, you were very clear, Steve.
I was very clear.
I think you should go back and listen to it. It wasn't clear at all.
Obviously people in the Discord group got it, didn't they? So just you two imbeciles.
People in the Disco got it. I wasn't even sure you're getting towards anything reminiscent of a fact, let alone do a pension. It's unclear to me. Anyway, do you know what, guys? To ask you a question, I don't know if any of you, before we get to stock shit, are any of you, because I left my office there, I can smell cat's piss. Right? I smell it really strong. What is that? And I'm aware of this smell because I remember the last time we moved into a flat in Surbiton, the previous owners had cats and they'd been peeing inside the kitchen. And you know that Paddy will know that what's the boards below the cupboards called? The flush boards, fascia boards, I don't know what they're called. Below the cupboards on the floor.
Pee balls, yeah.
Whatever. But they had become so sodden with cat's piss that it's swollen and they broke off in your hands like that, like soggy Weetabix, you know, because it's like MDF or something, isn't it? But it was a stinking of that. Anyway, I've been smelling this recently, you know, what the hell's going on? In my office, maybe it's in my office. I went in the garage earlier, I thought, it's in the garage as well. My garage and the office are linked. I thought, what is this? And I just took Fred a boxing just now, and I could smell it again. What? I mean, looking in the car for a cat that's following me, you know. What is this?
Probably Fred.
Yeah, and well, you had the car at the time. And
Was it your colostomy bag?
that was it. It was just leaking. It's not cat's bits, it's human bits, isn't it?
Yeah,
that's what it is.
it.
Very
There it
similar.
is.
But no, and I thought, is there a medical condition? Because I've heard of this, where people are smelling certain things. Is there a medical condition that makes you smell cat piss? I thought it could be something.
Or is a cat pissing on you and you don't notice?
Yeah. Every time I turn around, I see the back end of a tail. Get that new stop you pee. But I thought, maybe, because some people have this, and there were certain diseases, like cancer or something like that. Start me worrying there about that, but I haven't looked that up anyway. Right, so I just want this is with the feedback bit. But like last time with pensions, people were very helpful there. Maybe they can help us on this.
Okay.
Yeah, anyway, so...
Strong content there, that's good.
Yeah, strong content. Always start off with your strong bit. Oh, my word. Doesn't bode well for the rest of the podcast.
About pension tax and caspits.
Doesn't, that's what a segue, eh? But it doesn't bode well for... So anyway, let's talk about financials. Lots of figures out over the last few days. Any figures, guys, stick out to you, from financial... Sorry, Steve, man at the back there, big ears.
49.
49, good. Pete, what about you?
4.25.
4.25. Oh, I see where he's going. Yeah, Paddy, any figures?
No.
Okay.
I've not noticed any. I've got to be honest.
Okay, but have you noticed recently though that financial news is pretty much headline news, isn't it? Recently in the news, normally they talk about stuff like immigration or politics, but it's right now front and centre financial news. And I think the last thing was inflation, wasn't it? And we had interest rate 4.25. The Bank of England, the governor. Oh, I'm going to push it up by a quarter of a point, boys. Yeah, just push it up a little bit, yeah. Don't stress the banks.
It's not working, is it?
What?
But if inflation is continuing to go up, and
well, that's it. Well, no, that's why. So that inflation.
No one ever questions this. You just hear news reporters going, "Yeah, doing this to stop inflation," but no one actually goes, "Does that actually work?"
Yeah. Do they actually sit back? They just push it up like that. Inflation figures the day before, and they say, "Right, I'm the governor. Put it up by a 0.25%." Yeah, Jeff. Yeah, all right. Put it up then. Let's have a look. They look at the screens. It's not working, is it, Jeff? No. All right, give it a month. Yeah, we'll do it.
Yeah.
See if it takes a while to sink in, Jeff, I think. Does it? Yeah, all right. We'll wait for a month and we'll chuck it up again, yeah? But, yeah.
It does seem like they only have one solution. It's like...
exactly. What do they do all month?
What else? They
sit there. The market is expecting 0.25 of a percentage point rise, and they go, should we go in the market? Yeah, do that. We don't scare the markets, do we? No, you don't want that. People run the doors. Just put up they just call each other. It's 9 members on the committee or something. It's ridiculous. And what do they talk about? The entire month. Then in the end, they put it by 0.25 percentage point, which everyone was forecasting pretty much. Now, what I like is the ONS, right? I just think that it'd be amazing if it had a bit more fun in these finances, and they made up figures. Just made them up. Yeah. Like the Bank of England, they were selling themselves, Bank of England committee, monetary policy, we're just holidaying it up, whatever, Centre Parks abroad for a week, and they come back every month, and they come back for the meeting. We looked into this deeply. But the ONS, what I find odd, the ONS predicted, everyone, all the sort of, the analysts, they question, we're looking at inflation coming in at 9.9. 9.9, down from 10.1. That should be what it should be. Okay, and then it comes in at 10.4. Every analyst genius you've asked, all these people, and they're doing this for a living, forecasting numbers, were way out. It was way. So I'm just thinking, either they're rubbish, they're all rubbish. All these hundreds of financial journalists are rubbish. They have no idea what's going on, or the ONS are messing around. Do you think? They're just sitting there thinking, look at all the analysts, look, they all want to do 9.9. What should we do? Should we give like 10.9? No, it's too much. Just 10.4, yeah? Yeah, let's do that. Yeah, that'll shock them. And I think it'd be quite good if all the ONS guys just made figures up, even like COVID stats. 10,000 died today. Let's push it up. No, put it down. Just messing around with figures. Because it's the perception, isn't it? It's the perception of where we are. That little number, even if it's like even if you messed it up and it was like a typo on an ONS guy's spreadsheet or something, or they got some kind of formula wrong, because they've probably got some wicked spreadsheets going on there, haven't they, in the ONS?
Oh, yeah.
I mean, I've got some wicked spreadsheets, but I bet the ONS guy's wicked, man. I bet they're literally spreadsheet parties. Look how complex this is. Look at the model I've built. But you get one little, formula wrong in that, and you can just throw the whole figures out and move the markets. And, you get the boss, I'm sure, he said, well, Colin knows his stuff. It's got to be right, 10.4. He's just done all the... Look at his spreadsheet. It's amazing, man.
Yeah.
Can't be wrong.
Yeah.
Can't be wrong. It's got to be right. But everyone else, all the experts say 9.9. Colin, no, mine's right. Mine's right, 10.4.
And he puts it through to get reviewed or whatever, and they'll yeah, it's probably right. Yes, I can't bother to look through it. Yeah, it's fine, Colin.
It looks fine. It's been a bit unexpected because everyone said 9.9. No, it's right. Okay, fair enough, Colin. Let's leave it and release it 10.4. And then it crashes the market. But if he'd gone the other way and it literally been lower than expectation, it's gone down to 8.9 or something, the markets were rallied. The power of that spreadsheet.
Yeah.
Typo.
It's all pretty arbitrary, isn't it, really?
Yeah, it's all just random. It's all right.
Yeah.
It's all perception. In fact, I started listening to a book. Someone recommended it, a little about perception in your mind and spirituality. And it's a little bit about that, about reality and perception. And there's a lot about that, when you start spreading, like, for example, COVID was a perfect time, was when people started talking about, I remember the time, standing outside my house, thinking there's a serious disease floating around in the air. How dangerous. And at the time we didn't know. But they try to reinforce this figure, this image to keep everyone in the house. And you think it's almost like invisible, noxious gas going around. And then you realise it isn't that bad, actually. It doesn't really hurt normal people, healthy people, young people, just people who are frail. It's not that, it's like a cold or a flu a little bit. So, just the perception. And that's, a lot of that's in the markets, I think, isn't it? A lot of that, when you get these sort of negative sentiment, I do find it funny. Sometimes you just get a wave of money and literally the stock market start rising. And yet the conditions haven't changed materially from the day before. Right. But yet everything's rallying. Why is that? And it's all perception, isn't it?
Yeah. Yep. And it's sentiment, isn't it? So it's just, and it spreads. Yeah. It's contagious. Yep.
That's what the markets
are. So
let's
get some positive sentiment going, shall we, boys?
But what I'm saying is, this is what I'm getting to here, right? Is that the market is a stock market. It's a market of stocks. Yeah, lots of different stocks, and people tend to go with the herd. Everyone sells, which is not a bad thing. But if you did the opposite, when everyone's buying, you went to cash. Okay. I'm going to go cash because everyone's buying. The stock markets are high. It's obvious. Like Paddy said that. You tell us that, Paddy, didn't you? Yeah, I should have sold at the top. I told you the top was there. I said I should have gone out. And you guys didn't.
No, I asked, we're at the top, should we sell? And you said no. That's right.
You could do know if it's the top, do you? Should we sell at the top, guys? This is the top. Is it? Yeah. It's funny, a random guy, Pad, comes in to invest and all of a sudden he just picks up the top. Right. This is the top, guys. Should we sell here? No. It is the top.
Yeah, exactly. I was right there, wasn't I?
Yeah, he's casually mentioned the top. This is the top.
Is this the bottom, Pad?
No, the bottom's well gone. We're on the way up now.
Yeah.
Okay. Right.
We missed our opportunity then, haven't we?
Say again, Steve?
We missed our opportunity to buy more at the bottom.
What do you want, Mikey? What are you, Mikey?
This is the problem, isn't it? When you're at the bottom, you don't have the cash to buy. So,
yeah. Well, they said no bell rings at the top or the bottom, which isn't strictly true because they ring the bell every day on the Nasdaq and the New York Stock Exchange, and they've got to be close to it one day, haven't they? So, but no one's going to tell you it's the bottom or the top, And Steve, you sound very distant on a small little microphone, like a Barbie microphone, like it was, the Frisco Disco. Are any of you old enough to remember Frisco Disco?
No.
See, there are people out there right now of my age who think, yes, I remember Frisco Disco. It was
he was like 20 years older than us. So,
it was like a first-year DJ set, right? A little plastic thing where you could put records on, and you could actually turn the motor around, so you could turn the records and you go backwards.
Oh, that's right. It used to play like Bar Black Sheep and stuff.
Yeah, and you could have a little microphone as well. It's like your first DJ set. And at the time, I didn't realise I was going to get in radio, but it was a good toy. But now you could go back and you can, if you're writing a book, you could construct that. Can you say, yeah, I always liked DJing from a young age, like Frisco Disco. Not really, it's just a popular toy. Anyway, but where was I? Where was someone? I went off a tangent there. Oh, yeah. So I think you're right, Pat. I think we've had lots of now bad news coming out, and we haven't retested the lows in October. Now, this is the time, and I'm not going to say go nuts, go crazy, but this is the time you can get rich. Because, because there are some stocks out there, you talk about microcaps with amazing IP that are doing sort of well. They're a lot more further progressed than they were like 18 months ago, and yet the share price is a tenth of the price, pretty much, or even a fifth of the price, and yet they will go on to be, and that's why as I break up my portfolio into lots of different sections, and I've got sort of 4 hope high potential stocks, and in those, I believe one of them will be a 10-bagger, and that's all you need is one. Even if I own 20 stocks, if you're averaging up and you're piling onto the winner, your portfolio gets leverage to that. And also, all you need is one. And I do feel, in fact, you've probably watched the webinar last night where I bought another one. I've got now 4. I've got 4 in that category. That category for me is filled up. It's all in there. I've got 4 hope high potential stocks. Now, one of those I hope will be a biggie, and all you need is one because they can do multi-bags. But obviously, the chance of that, and I've got, as you go up the sections in my portfolio, there's safer stocks. They'll do less of a return potentially, but there's more chance of that less of a return, Whereas the ones on the bottom there could do a massive return, but there's even lesser chance to do that. So there's more of a chance than doing a smaller return, less of a chance of a bigger return. But did you watch the webinar?
I haven't got into it yet.
You haven't got into it yet, you said. That was just a poor excuse. You couldn't even construct an excuse there, could you? I haven't got into it yet.
I haven't got
I've got it on Steve's link in my Sky Planner. Yeah.
Yep.
Oh yeah, Steve, what microphone are you using? That's what it was. Steve's Steve's microphone sounds like he's using a little toy microphone.
I'm right next to the microphone.
There he is.
That's better.
That's better.
Anyway. So
I'll watch it.
No, but there's a couple of us I mentioned on there as well. But there are genuinely now companies that were literally, as I said, they're less advanced, they're less developed, and they were 5 times the valuation they are now 2 years ago. And they've got, and whenever you're looking at a hope high potential stock, that's not a trash stock. Like I said, they've got to have something, and hopefully got a bit of IP there. And then that's 3 things they've got to have, pretty much. A bit of IP, intellectual property that's unique to them. Secondly, the market for it's got to be big, and then maybe there's no one else in that market. Their tech is better than the next competitor. And thirdly, they've got to have cash because they're pre-cash. So you've got those 3 elements there for a hope high potential stock, and you're talking about a winner. Absolute winner. So when you're looking at I know you guys do a lot of research on micro cap stocks. So when you're looking around, look at those 3 elements, right? The first element, So tell me, Steve, the elements. What are you looking for in a hope high potential stock?
Earth, wind, fire, and water.
That's it.
That's it.
Earth, wind, fire. That was like
fire, that famous element.
Steve going to an investment evening above a pub somewhere. And question for the man is.
I was actually just named the 70s band with a bit of fire on the end.
Did they go through the presentation, for the company? They did questions at the end. They're all asking, So when you expect to sign this deal and all this stuff, and what would your gross margins be, do you think? And Steve, man about there, do you have earth, wind, and fire? I don't know.
Yes, absolutely.
I'll ask the CFO. Yeah, absolutely.
Quarter 4.
yeah, we got all that. Come in, quarter 4. Excellent. I'm in. And just leave the room, Steve. Right. Just storm out with his clipboard. Brilliant. I'm in. But what are the elements, Pete? Anyone?
What now?
I do feel like sometimes you are watching the one show, and
my headphones fell off. Did you ask a question?
I'm turning. Do you know what? Megan was doing this online course for work, and this guy was doing it was so boring. She literally took her laptop, lied on the sofa, and I was on the other sofa doing work on my computer, and she fell asleep. Right, and the guy, 13 people, and the guy asked Megan a question. And I didn't know she was sleeping. She dropped off. And I heard the name Megan, and I looked at Megan, she was sleeping. I said, Megan. Megan. Yeah. And she looked at me, I said, ask you a question. He said, I said, ask you a question. And she almost forgot she was online for a second, I didn't know where the hell she was. And then she looked at the computer in front of her and saw all these people on the screen.
Was she on video cam as well?
No, she says she doesn't like video camera because the kids are running around. She doesn't like looking at the kids. She makes it up. And then
I don't like being on the camera because you can see when I'm sleeping.
yeah, that's right. It'd be good if you're that honest, wouldn't it? Yeah. And she literally went, sorry, Jeff. Can you answer again? Because you broke up there in the thing. And he asked the question. Oh, and she says, good question. Is it? And literally just had a stab at it, and it was wrong, completely wrong, the answer. but he was so polite. He said, no, I can see why you would say that. But wouldn't you be doing this? He said, yes. Sorry, yeah, absolutely, yes. I'd check that first, yes. And she's looking at me with a wide-eye thing. Bloody hell, I was close. She didn't really get away with it.
No.
That must happen so many times during COVID lockdown with Zoom calls, mustn't it? You know, people just... But that's what I feel like sometimes with you guys. And some of you have used the excuse. Sorry, you broke up then, just. I didn't quite hear you. Your internet dropped out for a second. What was it? So anyway, IP stocks, hope hyper stocks, they've got a bit of IP, something different, something unique, you know?
Yeah.
The end market's got to be big and commercial, and that IP they've got has got to be better than the next competitor. And thirdly, they've got to have cash, you know what I'm saying? They've got to have a back pocket full of cash. Yeah. And then, so when I'm researching, I'm looking at, 4 different kinds of stocks. At the moment, do you know what I'm obsessed with? Do you know what I'm obsessed with, boys, apart from stocks and shares?
Boots.
Not boots, no. What do you mean boots? As in the chemist or the or shoes? Or
the chemist, yeah.
No, boots. Sean Locke's joke about that makes me laugh. You know, when he walked in, he says, boots! He walked in and shouted, he says, boots! He said, what are you shouting at me, sir? Where is it, boots? He said, what's that, sir? Why are you shouting? It's not my fault you write your sign so big outside, is it? It says boots! So why's your sign so big? It says boots! It's just a stupid joke, it is. You boots! No, not boots.
Was I close?
Right.
No, you weren't close.
Superdrug.
No, the thing is, I've got pretty much all my slots are filled. You know what I'm saying?
Oh. Right, yeah, you should get a Superdrug then.
Yeah, or boots. I got a boots.
Yeah.
Excuse me, love, all my slots are filled. Yeah. I need to unfill my slots. Imagine saying that today by the counter.
They've heard it all before.
No.
Yeah.
You wouldn't be able to say that though, because your mouth slot wouldn't be full.
Oh, yeah.
So maybe just hand over a bit of paper with a scribble on it. All the slots
that's
are
a
filled.
pharmacist. Some of the stuff that she gets that comes across her desk is eye-watering.
Yeah. I suppose the thing they're not looking for is when said, how can I help you, sir? Is there somewhere I can show you?
Yeah.
Oh, no. I don't. Can you just explain? No, you're gonna have to see this. You're gonna have to see it. Literally, he takes you on your back and he's got a hamster hanging out of his arsehole. No, don't miss that. I'll cut that bit out, the arsehole bit. Oh, and bit, and that one.
Right,
But,
okay.
Anyway, so I'm looking at my slots on my portfolio. I've got 20 slots.
Got it.
And my big cap slots, which is colour-coded green, I've got 3 in there. Ashmore, Money Supermarket, Pets at Home. Okay? In the dark blue slots, which is sort of mid-cap, I've got ASOS and Jupiter Fund Management. And in my light blue slots, which are small caps, there's Art and Tex, MJ Gleason, On the Beach, and another stock. There's Secret, because it's exclusive to the club. In my light red slots, which are my microcaps, these are microcaps with revenue close to profitability. These are not hope high potential yet. I've got XP Factory, Trufin, and 2 other companies already in there. And then my hope pipe potential slots are full. I think I mentioned Poolbeg Pharma. I don't know, I mentioned the other the GTEX in there. A couple of others maybe. There's 2 others in there now. They're full slots. But what I'm obsessed with at the moment is dividend payers. It sounds boring, right? But dividend payers in this market, a bloody awful market going sideways. I don't think the market's going to rally for a while until we see consistent, mucked about numbers from the ONS, inflation coming down for like 3 consecutive months. Unless that happens, because you'll have these random months like we just had, where everything's expected to come down to 9.9 and it jumps back up. That's inflation for you. It's really sticky. Ugh. Got inflation all over you. It's all sticky. But that's what it's like. I mean, if you go back to any periods of time where we've had inflation, it's never gone down smoothly. Never goes down smoothly, It really clogs up your slots. But really sticky inflation. It's like that slime stuff. It sticks all over you, or anything else that's a bit sticky. So until we have a definite trend of inflation going down, then that will, I don't think we'll have a rally.
When's that happening?
All right, that'll happen on November the 13th, Steve.
I'll put a reminder in my diary now.
Paddy will tell you.
Because we're not going to get back to... You'd have certain stocks, of course, macro caps will rally like hell, just on great news and come back down, or some of them will carry on rallying for a bit. But if you're talking about high potential stocks, they're not generating cash. Because those stocks went crazy, 5-6 years ago, on cheap money. They easy to raise money, cost of capital was low, all that stuff. Then, everything was rallying. Those go crazy in times like that. Right now, it's not the time for that. But you will have individual stocks. But the general index, I think, of AIM and the smaller caps of things, I don't think they'll rally. I think so. So what I'm doing is this. I'm looking at very good companies that pay very good dividends. They're very well covered. Like for Money Supermarket, for example, 5% dividend. So you'll reinvest that, and I'll just wait. But in fact, Money Supermarket's at 12-month high now. It rallied to 250 today. But I invest. I want to get paid to hold stocks and not going anywhere, or if they're going sideways, I want to get paid for it. Mr. Market, I want to get paid to hold your stocks. Okay, it's like I'm parking in my account. I'm charging you. And do you know what? Dividend reinvestment. This is the power of it. Okay. If you'd invested £1,000 in a fund that tracks all the companies in the UK's FTSE All-Share Index on the 31st of August, 1998. And taking dividends as income, so you're just taking the cash as they come, just taking the cash and spent that on sweets and chocolates and stuff, and and pillows, soft furnishing, that kind of stuff.
Yeah.
If you'd spend all that money, your investment would be worth 1,682 today. That's crap, isn't it? Over 20 years, UK All-Share.
Spending it all.
Pardon?
What was the initial investment? £1,000?
£1,000, 1,600 over 20 years in the UK All-Share. Right, because up and down, up and down, up and down. However, if you'd reinvested the dividends, that same £1,000, maybe not the same, you could have done parallel. You could have done parallel. Anyway, but that £1,000 would now be worth 3,268. So that's a gain of 68%, which is spending your dividends, versus 226% reinvesting the dividends. That's the power of compound growth. I tried to explain this to Fred's friend.
Where's the data from, Justin? That seems a little far-fetched.
No, that's the data's from. I think it's from. I'll get it for you now. In fact, it's from. No, you can do it because it's the eighth wonder. Buffett calls it the eighth wonder of the world, doesn't he? It's from BlackRock, educating, get to know investing, the power of dividends, and Buffett calls it the eighth wonder of the world, compounding. Because what happens is, let's say.
I understand compounding. I just don't understand how, if you've got £1,000 worth of stocks.
Yeah.
Just by the nature of that going up 6% every year, that on its own should be dramatically more than 1,200. Then add in the dividends.
Yeah.
I know it goes up and down, but on average it goes up, 5-6% then?
Well, the All-Share maybe is up and down. You need to pay. That's why if you pick a fund, you've got to specify a little bit. But also you can actually pick like that IUKD fund is FTSE 100 companies that pay dividends, and that would be a good one to reinvest into. If you didn't want to get a thing, just reinvest. Because just explaining compound, I try to explain it to Fred's friend. I said, for example, if you own a share, let's say you own, buy £1,000 worth of shares, and then let's say you get 10% interest on that in dividends, and rather than spend that money, you just reinvest that in stock. And let's say you get 1,010 then. The next time, you get 10% of 1,010, and that compounds and compounds up and gets greater and greater and greater and greater. So the snowball becomes bigger and bigger. And let's say they give you a snowball that's bigger, it's the same kind of size. Every time your snowball gets bigger, they'll give you more of a snowball if it's bigger. So they'll say you give you a tenth of that snowball. Snowball gets bigger. Obviously, the tenth of the snowball gets bigger as well. It gets massive. But don't start throwing the snowballs away and having fun with them. No. You've got to start sticking it to your snowball, and it gets bigger, and so that gets bigger. So it's like compound. I'm thinking, it's always worth having an element of dividends, but I also want capital upside, so I also look for good value and growth as well. But dividends reinvested, to me, while we're sitting in this dreary downward sideways market, I think Yeah, compound. And that's what I'm going for. So I'm looking for another one, and I've got one. 40% of my stocks now will be dividend payers. They'll be in reverse. And I'm looking at another one I quite like to look at, I think. But I'll do more research. But have you got any dividend stocks? In fact, Lloyd's is a dividend payer.
Yeah,
but,
Lloyd's paid. Yeah.
As Russ Mould said on the podcast the other day, banks have been cheap for a while, right? He said banks have been below book value, basically, tangible book value. And he said the trouble is, we're now starting to realise they've been cheap because there's something smelly under the floorboards.
Yeah,
cat's piss.
It probably is
Might
cat's
be.
piss.
Might be cat's piss.
That's what it is. We're back to circle there. But the thing is, with SVB, I don't think the banks have. I don't think we're out of the woods yet.
No,
because we know what happened with SVB. Basically, people put their money in SVB, and they bought what they saw was government bonds, which are safe. Yeah, bonds. But they haven't been safe this year. They've been awful, and they've gone down in value, of course. So if all those people realise they're a black hole in their bank account because that money should have gone up, it's gone down. And then if everyone went to the bank and said we want our money back, they haven't got the money. So to raise some money, people said they're raising money. What are they raising money for? I said, well, they haven't got any money. Why haven't they got any money? And all of a sudden, that herd mentality. Let's go and pull our money from the bank. You can't pull your money from a bank. It's based on trust. If everyone did that, every bank would go bust. Because they haven't got the money just sitting there waiting for you. It's invested in other things, and some of them, those investments have gone down in value. It's not everyone.
It's not even. It's like it doesn't even exist, though, does it? It's like it's also just not even there in the first place.
Yeah, true.
Like, it's not. It's not like your money's invested in stuff. It never existed.
Well, hang on. No, but how do you get the money in there then?
It's just written on a ledger. It's not. Doesn't mean there's money somewhere.
But if you,
the whole system is completely. I was going to swear.
Well, I suppose
made up.
But that's why I don't understand about digital payments. So we have that already. This is it. So say you get paid a wage, it goes straight into your bank account. There's no cash. There's no paper and coins.
Exactly.
And
it's like when it says they're printing money. They're not printing money. They're just like sticking a zero on the end.
Yeah. So then you go and buy something. You get, so those cash goes, that wage goes into your bank account, and then you go and spend on your card, debit card, or your Apple Pay. There's no cash going on the system. It's all dots and zeros. That's all it is. Digital. It is digital. So all this fuss over, crypto, digital payments anywhere in the world. I have that. We've had it for ages. It's like, what's the big deal? I don't understand. What the big fuss is.
Well, no, that's blockchain, though, isn't it?
Yeah, blockchain, man. You can take the bank out of the equation. Oh, okay. Well, I don't know. Maybe some people work in a bank and they need to work in a bank. I don't know. But anyway,
well, yeah, quite.
Yeah. Yes,
they are a dividend payer, but yes, they're probably not the greatest.
Well, no, I just say at the moment we don't know there's certain things they're saying. Okay, if SVB has got that, then then you had Credit Suisse, which for a while has been rumoured to be in trouble. What other bank has got it then? And that's the worry. And Barclays apparently. Paul Hill was saying has got these credit swap stuffs. No one knows what the bloody hell they are. But anyway. So and also banks. I find banks very hard. If I try and read a bank financial statement, I find it very hard to do. And it's because basically
a bank statement. They're quite easy, just. I can explain them.
Your name's at the top.
Yeah,
that's you. If it's not your name, it's not your statement. Simple as that. And
pretty straightforward.
Yeah, the numbers down the bottom, either the date or the stuff that's going in and out of your account. No, but what I'm saying, a bank financial statements, for example, is very odd because, like I said, the assets are their liabilities because they've loaned them out as well.
Yeah.
So that you paid them in, they've loaned them out. So so hang on, and then it doesn't match. Well, how doesn't it match? Or it does match, or it doesn't. So it's very odd. So it's not like like a loan is one and stock is the other. Two different things. Asset and liability.
So if I was going to hive off some of my Lloyd's holding into another dividend-paying stock, which are the ones that you're sort of favouriting at the moment and which are looking quite healthy in terms of a secure dividend payer?
Well, if you just want to do a dividend fund, then go for the fund, the UKD fund, because it pays about 6-7%, I think, now.
Yeah.
And of course, that's largely made up from FTSE 100 companies. Well, it is that pay dividends, and in that basket there, you've got banks, oil and gas majors, which are having a bit of weakness, but that's good for the dividend. So if you put in a little bit of money into that every month, just automatically in that fund, then it doesn't matter because the dividend, if the share price goes down a little bit, the yield will go up, of course, and you get more shares. Of course, the share price will go down. But over time, it's almost like someone is, topping you up with shares. And when the share price rises, then you got a lot more shares. So that's why I don't mind. It's like averaging down, but it's costing you nothing. Okay, that's why at the moment I'm happy, to accumulate. I want to average down on stocks, but I don't mind if the share price goes down a little bit on dividend payers because it doesn't matter. The yield goes up, and over time, I'm convinced, pretty much convinced, the share price will go up in the end. And by the time it does go up, I'll have more shares, and they'll be giving me free. I did it the other day, right? I didn't have a lot. I had very little of Victorian plumbing. I don't know why that's catching on, Victorian plumbing. Who wants that now? Surely we're into modern plumbing, aren't we?
Good point.
Maybe you just go, maybe you just start a company called Modern Plumbing, saying we're better than Victorian plumbing.
There's one called Victoria Plumbing as well, isn't there, which causes real confusion.
Well, Victoria and Victorian. Victorian is the one that's listed.
They're different companies.
Really?
That sell very similar things.
Oh, okay.
Yeah, it's ridiculous.
Well, maybe that was the argument.
Which one did you buy?
Well, no, Victoria did quite well, but didn't have a lot in it, right? And I sold it, but I sold it after the record date, so ex-dividend date, which they dropped the share price by how much. Obviously, the share price dips down a little bit because that's how much they're paying out. And then you got the record date. If you're on the register on that day, the share register that is.
Oh, okay.
Yeah,
Not
the register. Are you on the register, son? No, I just want my dividends. And if you're on that register, then you get paid the dividend. Okay, but I sold obviously after the record date, and then all of a sudden I saw about 500 quid in my account from the dividends. That's nice, free shares. I sold them then, but yeah. So, but that isn't nice to be given something back from the stock market rather than it taking all the time, like it has done over the last 18 months. Give us something back, mate. Isn't it? Give us a chance. But that's the way to do it. That's the way to do it.
Don't tobacco companies normally pay decent dividends?
Tend to.
Yeah. Depending on your view on investing in those.
Yeah, I know some people have no moral question. I don't like that.
Yeah.
It's like, it's an addiction that's basically killing people's lungs. And
it tends to be, companies which have got, things going on, which tend to do big dividends, no?
Yeah, well, dividends are paid from excess profits, so it's got to be quite a successful company. So it's more mature companies that are not going to grow. They don't need that money to grow. They want it to entice investors, to give them a bit of a return, to get them to hold their shares and be a loyal holder. And but there are smaller cap companies. But there's one, actually, John Human, who used to be editor of the Investors Chronicle, works at Vox now. We do a podcast together looking at screeners. We screen for stocks. And the other day, he looked for growth and income. And he came up, and he hasn't invested for a while. He's been in cash for a while. But he invested a little bit into HAT. H-A-T. Search it up, because this is a very interesting... It's what they call...
Sell hats today?
No, it's what they call counter-cyclical stock. So if the economy is going to do badly, this group should do well. So basically, there are pawnbrokers, gold dealer, and foreign exchange people. So pawnbrokers and gold in recession times, very good. Plus they pay about, 4% dividend? But, and I thought, and I looked at the results of them recently on the webinar for the membership club, and they're decent, very decent. Sort of, what are they, not a big company, so they're 187 million. They pay a 5% dividend. They have 5%, and they're growing very nicely. So look at that. So you realise I didn't realise how pawnbrokers work. Have you ever been in a pawnbroker? I've never been in a pawnbroker. Have you?
No,
I've been in one. Yeah.
Who was that with? One of your pawn mates? Why did you lend
Just
some
have a
money?
look around. Because you can buy the stuff, no?
Yeah. They have it's almost like a
pawnbroker.
Yeah, I think it is, isn't it? But it's like a loan. They loan you money. It's called a loan, isn't it? So basically, the stuff you give them is collateral. And so if you don't pay the loan back, they'll sell that thing. So you're going with... And apparently, right in the moment, John was saying that watches are quite popular. Very flashy watches, because during the good times, people go, let's get a flash watch. All of a sudden, they're skinned. Right, what can I sell? Oh, that flash watch. I'm not going out so much. I can't flash it around. So you go in there and say you bought a watch for, say, £2,000 or £1,000 or whatever. And they say, right, we'll give you 600 quid loan for that. And essentially, unless you can pay it back with a bit of interest and to get the watch back, they sell the watch, but you've got a certain time limit. And then obviously they can sell the watch then for £1,000 and they make 400 quid in it. So either way, it's a win-win for them. And they prosper in dreary times. So someone is saying, they watch the news and say, and the economy is taking a turn for the worse. They're going, yes. So that's why you can own a stock and feel happy about it in bad times. H&T, I don't hold, but, there we are. Right, that's it. Let's wrap it up, guys. I've got to take my son's friend home now.
Right.
Oh, another opportunity to talk to me about compound interest.
Yeah. I'll ask him again. Did you get that analogy I gave you about the snowman? I'll try another one, yeah?
Yes, Mr. Waite.
Yeah, he's there with his headphones on. Yeah.
Yeah, whatever.
So, anything worth watching on TV, boys? Any podcasts? Anything you've been looking at? That's quite good. We've just been staring at the walls.
I watched a really depressing episode of 24 Hours in Police Custody this week.
Right.
That was really bleak, but also very interesting.
Is it, I assume that's a real thing. Is it real life drama?
It's real, yeah. So they piece it together from all the body cameras and the interview cameras. It's very clever, but it was a very bleak story.
Yeah.
So, yeah, I'd recommend that.
Okay. I'm watching at the moment The Bay. Have you seen that?
No.
I don't know how old that is. I don't know if it's on. I think it's on ITV. Is it?
That's been on quite a while, that, hasn't it?
Yeah. I don't know. It's like the one we're watching is like this Asian guy, he's a boxer up north. Obviously, Morecambe Bay. That's why I call it the Bay. But it's a police department there, and this guy gets sort of killed, murdered. He's a boxer and stuff. They're trying to find out, what happened to this. Obviously, something to do with. And they find out. Oh, hang on, it's not as straightforward as we thought. But that seems all right. But it's going to tide us over. There's nothing.
I did. I was hungover on Monday. Didn't get out of my pajamas and watched all 3 seasons of Happy Valley.
Oh, okay. Yeah.
What a life Steve lead.
Can I ask you a question, Steve? When you do
students.
Yeah, I know, but can I ask you a question?
Yeah.
When you do something like that, do you feel guilty?
No.
Do any of you boys? If I sit down and try and do nothing for a day, I tend to have. I got this kind of guilt around me. So you should be doing something at least.
I could never do that.
Yeah, I never do nothing.
But it usually follows. Well, as I said, I was hungover. It usually follows a very sociable weekend. So it's it's fine. I'm all.
Yeah, but I don't know what it is. Are we programmed that you should be working? You should be doing something constructive? Because basically, Steve, what you've done, you've had a night of excess, spending your money, chucking pee up the wall and stuff. And then you've wasted another day lying on your backside. And you feel no guilt there at all, do you?
I think that is what we're programmed to. I think I was reading a thing about this. Humans are programmed to be generally lazy and with small bursts of activity. So Steve's probably got it right.
Okay.
Yeah, no, I love it. Obviously, I wouldn't do that for like 2 days on a trot, but 1 day's fine.
Because you finished the box set, that's why. But there we are. Happy Valley, it's quite good. We were late to that, but we watched pretty much all of it through in one go. It's quite good, that, wasn't it?
Yeah, it was good.
On a Monday in your pyjamas? Yeah.
Yeah.
Right.
Yeah. All right, boys. Have you watched anything on TV, Peter? Anything worth watching? 'Cause when I do this, I'm generally have to recommend this. Me and Megan sit down. Literally, started watching something last night. We started talking about something, and Fred came in, and Nonny came in, and then literally watch about 3 minutes of this thing. What was it called? Something on Netflix called Secret Locker or something. Secret. I don't know what it's called. It was that guy who played Doctor Who for 1 season. What's his name? The McGann guy? Is it one of the McGann brothers?
Paul McGann.
Yeah, him. I like that. He did Doctor Who 1 season. I think they expected him to do 2 seasons. He didn't know and just left. But it's him.
I did watch something good the other week. Did I tell you about this already? It's on Netflix. It's a documentary about Rubik's Cube players. It sounds geeky, but it is insane.
Okay.
Watch it. I can't even remember what it's called. It's called Cube Chasers, I think, or something. I don't know.
Okay.
Look up Rubik's Cube on Netflix, it'll come up. Because there's literally one documentary about it. But it's insane, these kids, how quickly they solve Rubik's Cubes. Anyway, there you go.
Okay.
I do have one thing.
Here we go. Go on. Yeah,
the floodgates are open.
Have you got Apple TV?
Steve, I thought you were going to go on the classic then. Go on then. Yeah, go on.
Shrinking on Apple TV.
What?
Shrinking?
Shrinking, as in like a shrink, but shrinking.
Shrinking. Okay, not seen that. What's it about, Steve?
It's quite hard to describe.
Well, give us a clue. Are there humans in it?
It's about shrinks. It's kind of got it's kind of got a comedy on it. It's got Harrison Ford in it. that other guy that I can't remember his name. And what's the name?
Oh, yeah.
It's quite good. You should give it a go.
Yeah, well, the trouble is now,
Brilliant.
I haven't got Apple TV anymore, Steve. Cost of living crisis, isn't it? So you get into the herd mentality of cancelling all your subscriptions that you're not addicted to. So I've done that. So maybe I should revisit. Can you give me a login?
I've got someone else's login, so no.
Everyone's got everyone else's logins. Who's the unlucky sod paying for it all? All of us 7 mates just cashing in. Okay. All right, boys. Have a nice weekend, even though it's a Thursday. Speak to you next week.
Bye.
Yeah, laters.
Yeah, later.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.